Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, July 27th, 2009. Well, the markets are under a little pressure today. Dow down about 46, S&P down about 4.5, and the NASDAQ down about 13. It's a very minor sell-off, and you're looking right now at the intraday SPY 10-minute chart, which gives us a good analysis of the S&P 500. Now, the key here is this, folks. You can see every trend line is a very, very major level here, and you need to understand each one for reasons why the market's bouncing or not bouncing. Why is it falling? Why is it rallying? Why are you bouncing here? Why are you breaking down? That can all be told by these key trend lines on our charts, which we have for our premium subscribers in the Research Center and in the intraday stock chat. Now, bottom line is this. What you're seeing today, you saw this morning some weak earnings. All right, there were earnings from Honeywell, from Verizon, from some other key components of the Dow, and it wasn't exactly great, and it continues to be exactly what we've been preaching to our premium subscribers. We've been saying to everyone that this is bottom line an issue of earnings beating but revenues missing, and you saw that with Honeywell today. Perfect example. And this is what we've been talking about, how you have to understand that the reasons why the earnings are beating right now are because pure and simple it's cost cutting. Alright, when someone trims off all the fat and cuts all those jobs, you're going to save a lot of money, and that goes to your bottom line. That goes to earnings numbers. So when a company comes out and says we earned $1.05 instead of $1, well, that sounds great, but you have to look underneath at the revenue numbers and see what the revenue numbers came out, and more likely than not, revenue is missing. And what that's telling you is that fundamentally, this economy is extremely weak. The only reason these companies are beating right now is based off of cost cutting and not because sales are improving. In fact, sales are getting worse. And that's a very scary thing going into the later half of this year. Now, it may not have an impact in the near term or the midterm, but over the longer term, by the end of this year into early next year, when you start to see earnings where the revenue and the earnings continue to drop, or the earnings now start to drop because there's no more cost cutting, then the market's going to have a drastic reality check. And we'll find out again, we'll reveal to our premium subscribers when that's going to happen. But right now, let's just focus in on the charts, see exactly what this is going on here. You're getting a little bit of a bounce in the market. I just want to draw your attention. These are your key trend lines. This trend line up here mirrors the high of the day. We had good home sales. New home sales were up 11%. But you have to understand the psychology of the markets. All the little amateurs jumped on board on the long trade right here, thinking that was going to be a monster rally. And lo and behold, there was a great fake out. You have to understand, everyone's already bought into this rally. There's no one else left. So when the amateurs jump in, push it up like that, where you spike up here to about 98.50 on the SPY, more than likely you're going to see an ugly reversal, and that's exactly what we saw. We saw the market just tanking, taking out this whole green candle, closing down here. And then what you saw after that was continuated selling all the way down into this pivot low. Now, where does this pivot low come from? Why is that such a key level? Well, take a look at the pivot from Friday. See the consolidation pattern, the low of the consolidation pattern right here? It also mirrors the low here. Also take this point right here, draw it right up, connect it to the low right there today, and you also have the bounce that's happening right now. So if you want to see exactly what we do in the Research Center to our premium subscribers, it's analyzing the market from a psychological standpoint and from a technical standpoint, price, pattern, and time. And by doing that, we're able to isolate all the key levels in this market that you can see, whether it's intraday, daily charts, weekly charts, monthly charts. If you're an investor, a swing trader, or a day trader, it all applies to all time frames. And sure enough, you can see right here, connecting this to this is giving you the bounce right here. As you can see, a nice little dump out. Now we're bouncing up. Now what happens here? We'll also take a look at this. See, the market came down right into this level. This orange trend line got a bounce. Where did it go? Notice this line right here, and I'll show you exactly where that line came from here. Right from this low. If you go back to the 22nd right here, take that low late in the day, connect it up through the low here, and it gives you that exact high. So every high and every low can be dictated and told and analyzed and known ahead of time before it happens, and you can be on the side of the trade that's going to be worthwhile and make you some money. So sure enough, we obviously knew you'd get a bounce right here. Sure enough, you're getting a little bit of a bounce after a dump to this level. Now, the question is, well, what's the next level to get hit? Because you have a couple scenarios. Number one, if we look at the chart in current time, in real time, and by the way, I do these videos in live time, you can see if we continue to bounce up, you're going to have resistance right here because you have a necktie, which is the 20 and the 50 moving average, coming together right here at around 97.75. So resistance at 97.75, but it's only minor resistance, minor. If you get through that, you're going to go up to a little minor level at 97.85, and then your next major level will be right up here at around 98.05. 98.05 will be major resistance. On the downside, if this necktie holds true and we break down here, maybe we're making a little bearish pattern here, possible bearish bull flag pattern, bear flag pattern, then you look for a breakdown below this blue trend line, which takes us to the low of the day right here at 97.30. 97.35. That would be the low of the day. That'll be support down here at 97.35. But notice what's happening. The minor resistance level is attempting to be broken here, and we'll have to see if that does happen, folks. Remember, volume is exceedingly light right now. Insanely light volume in this market, and that always favors the upside. Look at this. I want to show you this today. Look at the heavy volume. It was in the morning, right? What happened in the morning? We sold off. As soon as volume got lighter down here, all right, where it got to be non-existent almost, what happens? The markets trend higher, go sideways here, and now are popping up very, very easily, and that's exactly what you have to understand. When the volume's light, and I preach this in these videos non-stop, that will happen. Now, the markets are getting a bounce, as we talked about here. The S&P's just down 3, Dow is now down about 38, and the NASDAQ's down about 12, so you are getting a nice little bounce here. We knew that ahead of time. Now, this candle doesn't close for another 7-8 minutes right now, so you may pull back, and you could actually pull back underneath, but right now you're right on that necktie, which is major or at least minor resistance on the upside. Now, a couple other things. Let's look at the 60-minute chart. There's a couple things I want to focus in here on and really give you guys a good sense of. Number one, the 60-minute chart's an interesting chart, mainly because you do have a possible pattern beginning here. All right, we'd have to see a breakdown in this chart later today and tomorrow, but there is a pattern developing here. In addition, there's some major trend lines that are cutting right underneath here, which are going to give us major supports. And that line right here is going to be very, very key on the 60-minute. If you come down to it right around this 96.75 to 97 level, that would be very, very heavy support on the 60-minute chart. Right now, what are you bouncing off of on the 60-minute? The 20 moving average. It's your first official hit on the 20 moving average in a matter of probably about 2 days ever since this breakup right here. So 20 moving average right here, obvious support, which is also, not only do we have support on the 10-minute right here, but if we go to the 60-minute again, you also see the 20 moving average support line right here. So all that is working to give the market a little bit of a bounce here. The question is, do we come right through it and take it out to the downside? Now again, we got to watch. Right now, today, financials are doing a little better. You have some general strength in financials. Technology is very weak, and you have a couple Dow components weak. As we mentioned, Honeywell was a little weaker earlier today. It's about flat right now on the day after those earnings. Alright folks, that's about it, but I really want to encourage you, come join the Research Center. Understand this stuff. You will improve your trading percentages tenfold. Alright, that's just the bottom line, is to understand why you're going to bounce. Why did you bounce here? Why did you bounce here? Why did you fall back right here? That's all stuff that you can apply to the daily charts. Here's the daily SPY. Actually, that's the weekly. Here's the weekly. Do you want to know what this is telling us? Or is there a key trend line up here somewhere, up here somewhere, up here somewhere, or underneath that's sloping up? So if you fall, you're going to bounce off of it. That's what you have to understand. That will give you the swing trading edge that you've all been craving to make yourself an 80-90% success rate winner, bottom line. Alright folks, that's all for today. Have a wonderful, wonderful week. We'll be back to you tomorrow with another free video. Take care.